Ladies and gentlemen of the crypto space, we're live on a Sunday. What the hell's going on? It's Sunday, November 10th at 9:30, 1 a.m. Fine, I'll give you the one. All right, it's a weekend. Weekend update live. This is Sunday morning. The numbers on the markets are probably very surprising to many, but we on this stream have been talking for years, and we will continue to be calm, cool, and collected. And I have some memes from last cycle that I'll eventually post on social media. Um, that safe moon meme, that dude on TikTok that was like, yeah, this just. Oh, I closed it. Did I close it? There is it. This one. This guy. You remember this guy? I don't have the audio because of streaming, but this guy's wild. He's got so much energy. It was so exciting. Safe moon. This thing gotta go back on X. So the point is, let's go back to the chart. This is when people start to get excited again. When the appropriate behavior and positioning for your mind, be excited. Did we not know that this was coming? This is literally exactly what we talked about for the last 2+ years, probably since the crazy times in 22. But we were still on this stream in 22. Nothing changed. Our narrative didn't change. The only thing that has changed thus far is pricing. But we've been extraordinarily consistent with what we know, because what I know is that the Curve Federation is an extraordinary offering that hasn't been offered since nation states. And that's a theme we've talked about for years, and that's still the case, and probably even stronger than ever heading into this type of market environment. That is certainly stronger than ever. I don't see any invalidation of that narrative. So, what we have to remind folks is that most of what they see on social media is mid curve, and there's certainly left curve. The memes are popular in Solana, and I talk on the channel. Not a bad thing that memes are popular. And why do I channels? Because it's good people, and it's a part of these markets. But what I can extend that conversation to on my channel is something very simple. What are the odds? Because odds are everything. So if you are taking risk and you're playing blackjack or poker, there's odds. Not like, oh, all right, fine, black. There's odds of success depending on what cards are displayed. 20%. I find in Hold'em you can do those calculations as well. And what's the odds the next card is the card required to win? So in meme coin land, this isn't the whole story even. The point 0.5 people made any money. This isn't money. That doesn't count. And it's even worse, 60% lost money. But if you're going into meme coins and you made $3,000, you didn't make any money. That's not anything significant. And frankly, $10,000 isn't even money. An exuberant stamp how crazy shit gets. $1,000 into $10,000 of meme coins. That's not too crazy considering the multiples they produce. But 0.5% made 10 grand or more, and that's just statistically speaking. So part of this market is the same as it's always been. It's this degenerate attempt to turn $1,000 into $100,000 into $1 million instead of $1,000 into $10,000 over a year, which is insane. It's insane. Or to it's not even see the fallacy. Here's really broken about capital management. Um, it could be about target X amount of money because that's not technologically reasonable. It really needs to be about procedure. I have X amount of capital, and what do I do with that capital in what circumstance? I need to buy something, which makes sense. We probably should own more assets. Like anytime folks say not financial advice, there's some extraordinary things that I always say are financial advice. You should own assets. That's something that always needs to be stated as financial advice. Okay, now what assets? All right, great. That's the question. And that's the entire conversation. Clearly, it was Bitcoin. This is not necessarily at this price. So it's very complicated to get on a moving train because that's what Bitcoin is right now at 79,000. And when it punches 80 and then it's 85, 90, that's a moving train. What's the expectation? And people are going to have the wrong expectations. And that's exactly why with pump fund and meme coins, well, 60% of people lose all their money because they have the wrong expectations. So you got to come into capital management with a much more structured approach. The great stream as a reminder of there being euphoria in these markets, but you got to be thinking about things a little bit different, a little bit more structured. 15,000. That was a hell of a bottom for Bitcoin, late 22. Come a long way. DCA is a great approach for smaller capital. I want to get that out there because I know markets are getting hot and people are like, what do I do? And it's imperative to respect the size of your portfolio. The more money you have, the more choices you have, the more things you could own, and you have potential to engage with the market and capitalize in different ways. If you have $1,000, you're not providing liquidity. Okay, you're not making 30% on your money providing liquidity in stable coins. That doesn't seem reasonable, but dollar cost average is. And good old Bitcoin is a great dollar cost average. So at this price, what is the expectation? You're buying at a premium. Bitcoin is relatively expensive to the price it was. What is some other bulletable expectations? It is clearly expected for the price to go up, significantly up from here. At some point, the price will come down from where it finds its top. The price will come down most likely to lower than where it is right now. So everything that you buy between now and like a year now, uh, the price will eventually probably be 60 to $70,000 in bear market bottom at max fear mode. Why? Because that's exactly what happened the last time. And the last time, history doesn't repeat, but it rhymes. But last time he came a little X amount of percent below the top. It's 20% below previous all-time highs. So if your all-time highs were, let's say, 70,000, you're talking 20%. That's 14,000. So you're talking what's 14,000 of 71,000? Okay, so you're in the 60s. That is a reasonable expectation. So if you're dollar cost averaging Bitcoin, I'm sorry, you may be even in the upper 50. I would expect 60 to 70. So if you're dollar cost averaging Bitcoin at these levels, you should have an expectation that it's going to go very high and it's probably going to come back down. So that leads people to want to think, why should I buy on the way up and should I not just accumulate dollars and then wait for the price to collapse? Yeah, that is not a reasonable methodology for capital management because that means you have to time things right. And that is not something consistent that you could do from an execution standpoint. The appropriate thing to do with capital management is to have a routine. I do this day of the week. I do this day of the month. What day of the month do you do accounting? And you should have a routine. So that's why dollar cost average actually is very consistent with the things that I strongly encourage. Consistent, predictable, repeatable routine with regard to management. Hope that helps. So I think that's a good introduction as the market is starting to get hot, and we'll talk about other coins. Obviously, we'll get to every single question, but Ethereum had a nice rip off the bottom. And I expect the narrative for Ethereum that has been circulating to be completely invalidated. And that narrative is that it's not as popular as people think it is. And that Solana flips Ethereum or something flips something. It doesn't matter. The market will tell you what is going on. If Solana flips Ethereum, that's the story. Until then, Ethereum is a series of L2s and roll-ups, and 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 that is an extraordinary technological offering. Um, so until something is invalidated, the narrative stands. And that is the case right now from a market cap standpoint, as well as from a technological offering standpoint. There's little nothing that's written on Solana, which is like the depth and I mean, Jupe is, there is the technological offering, but it's not where it's not the developer depth is not as rich as it is on the EVM chains. It doesn't smell the same. Not in a derogatory way. I have a high opinion of Solana. I have a great deal of exposure to Solana. It's just from a tech investing standpoint, I see much greater progress, much greater iteration, and much more interesting fintech on optimistic superchain, hell of a narrative, and even which are lagging right now. Optimism is presenting stronger than Arbitrum, which is interesting because Arbitrum was first to come out. Um, I mean, you literally don't have the aerodrome, velodrome, or kingdom narratives over on Solana yet. So that is very interesting. What happens with that Solana V33 offering? Because we know empirically that aerodrome is what it is on base Bitcoin, Coinbase. That is a strong tailwind. It's not just the relatively marginal bids. I mean, it's millions of dollars that Coinbase holds. It's what that signals to the market and why people have acquired, why large capital has acquired large swaths of available. What meaningful? That's why when you're buying and investing, you need to understand the context of the investment, the market in which an investment is in, and more importantly, the vested interest. Who's the vested interest in Aerodrome? Coinbase. That's monumental. And that's the type of vested interest you want. You want alignment. And that is not what you get. I mean, it's frankly the antithesis and is the worst possible with regard to any meme coin. There is no honorable vested interest. It's literally every person for themselves. Period. Every single person that owns it is trying to make as much money as possible. Whereas the definition of investing is not everyone's trying to make as much money as possible. Everyone, or at least a lot of participants, if not the majority, want to own the business, want to own a company to make profit. It's not get in, get out type of capital management. I mean, that's capital, and you buy a fair share of a business and you look for your exit. But there's a lot of business owners that take great pride in owning their business. And those will be the most interesting businesses. That's how you differentiate. which crypto protocols are crypto protocols, are fintech businesses, and the people that own it. And because it's crypto and tokens, technically we could see the people that own it vis-a-vis bubble maps or even just the holders list on an Etherscan or whatever scan. Um, and you can get a sense if you did due diligence from like a D bank, who owns what, and you never really get a sense of their individual personalities. Alignment is locked assets. So in that regard, if there's 80%, 90% token, that's an interest alignment. So that is important to assess and should give comfort what you own that my peers, the vested interest, are required to not required to not dump it. They can't capitalize on it. That point. That's a big deal. In the sector of these crypto markets. And this doesn't exist in traditional finance at all. There's a thing as a locked position. So that is something that is remains extraordinary about these crypto markets that I have said for quite some time now is one of the most interesting offerings I have ever seen in these crypto markets. And yet the meme coin folks and less sophisticated actors will be quick and critical opinion that I hold quite dear. It's a very behavior. What of a meme coin holder? They're looking for it to go higher so they can sell it. What are the options and choices a person has with a token? You could buy, you could hold, you could sell. You lock it, you can't do the sell. It changes the equation. So not locked and protocol is paying you. That's something I've also said. How do you change? How do you person their bags of mail pay them well? That's what a dividend TradFi, and we have cash flow here in crypto as well. So that's very simple psychological pressure. Anywho, I guess the whole thought here was yesterday I was talking on Discord. And I was like, how do you break down these markets and how do you not bifurcate it and offer newer people to these markets a way to think about different sectors? 'Cause that's sectors in TradFi, you got industrials, tech, bio, biomedical, pharmaceuticals. Crypto is all fintech, but the narrative, the meme will always come back to what Bitcoin started, monetary policy. You'll see it. I'm telling you right now, you'll see it. You'll see, oh, the armchair tokenomics guru. Is it deflationary? Is it inflationary? Is it disinflationary? Is there a tax? Is there a buyback and burn? Is there a dividend? And it just gets humorous. And that's what occurred, and that's almost certain to occur again, that type of conversation, because that's the meme. That's how do you meme monetary policy? That, as described. Um, wow. Okay, let's do some commentary. And it's good to see curve at 28 cents. Not quite there yet. You look at the daily and you get over a couple of pennies more from here. You got the 200 SMA on the daily. Where's the TWAP? Can't even see it. I want to see a higher time frame 12. Okay. That's nice to see. At least we're above the top on the weekly, but it's not strength. There's no strength. There's no upward move. This market has started. Every market starts, meaning anything that is like, look at Cardano. Cardano's hot right now. XRP is going to be hot. Litecoin's going to be hot. Doge will be hot. Pick something that's not going to be hot. Everything catches a bid. This is that everything time of the market where everything and anything starts to go up. So the question is, what kind of portfolio do you want to own? What kind of capital management do you want to execute? And where are we? So this hasn't even started yet. This is very interesting. So we need to get above a couple of pennies higher, 32 cents, 33, 33, 34, start to break above there. And, maybe a quick move to 42 because there's literally no moving averages that any of the algorithms could latch onto. And that might be where the arbitrage heads. Kind of makes sense. Then you push through. All time high or not, a couple bucks is all that matters, in my opinion. At least that's my expectation. What, a 10x from here, 28, 280, get to around $3. I'd be on the floor if this thing was $3. And not in like, oh thank God it's at least $3. Like, wow, it's extraordinary for this type of asset to be worth $3. What the market cap would be, how you could inspect this as a business, wow, that'd be quite extraordinary, especially with the SCRVUSD LPs coming online. You've seen that, right, folks? Look at all the SCRVUSD, USDE, CRVUSD pair right here, USDC pair, 30% quorum. The big boys will come in, they'll finish that off by a couple of days. That should drive much more supply sync. Supply sync people will buy and that'll drive down yield. And you get an equilibrium between SCRVUSD deposits and interest rates. And that did balance things out. Very interesting. This is basically a reverse repo, by the way. This is uh, the bank accepting dollar deposits and paying an interest rate. There's no exchange for collateral, which is repo is. Um, I mean, I guess it can be, depending on what pops up with regard to SCRVUSD use. I mean, if you could if, like, for instance, if you get SCRVUSD on Aave or Llamaland, it's definitely going to Llamaland. Then that is literally an RRP. That is such a reverse repo if you could borrow against it. 'Cause that's a collateral, right? Does that make sense? That's coming very nicely, very obviously. And the synergy with money is going to be quite interesting. I'm surprised they're not ready yet. They're not ready yet. Money needs a little bit more infrastructure because it needs to arbitrage across the chains. It needs a way to stabilize its dollar. And then I think the big one that they're waiting on is the capacity to zap collateral from one chain to another. So if you like, you're at 30% on base, but there's basically no capacity to arbitrage. Uh, well, there's some complexities. You know what a big complexity is? The fact that CRBUSD is not really cross-chain. How the hell is because you can't mint it dollars. You can't mint. That must all be bridged. So if you're bridging CRVUSD to Arbitrum or Optimism, you're literally going through the main bridge, I guess. Because literally CRVUSD is only on mainnet. Yet if you go to lend, there is clearly a fair amount of CRVUSD and other chains. So I guess that is bridged. Must be going through the main bridges of the of the L2s. 7 mil on Arbitrum. How much is on Fraxel? 4 mil. Lot of, that's me. That's millions. That's a big business. I mean, literally, folks are so critical of what is a successful business in crypto markets. I mean, you literally have multi-million dollar businesses running around. You open up a pizza shop down the block, it's just a small business. These are this is big shit. I mean, if you go to mainnet, I don't know, $10 million business of deposits. Holy shit! People are so critical of what's a meaningful business. People are clearly malinvesting, and they're misinterpreting how to identify significant enterprise. It's so critical, so critical. Very unfortunate, and it caused a lot of people in hindsight to make the wrong decisions, or to hopefully, unfortunately, maybe realize they've made the wrong decisions, or were excessively critical. I did have a conversation on X yesterday with, it turns out to be an old name that I recall interacting with over the years, and it's unfortunate. I don't like Curve, which did not dump anything. He borrowed debt. What the fuck else are you supposed to do with all that Curve? Can't sell it. You can burn it and just let it evaporate. No, if someone's going to lend against it, great. Take the debt, and then he takes some income. And how did you think Curve got financed? How do you think all Llama risk team, and how do you think it all gets financed? So I don't share that opinion that there was maliciousness in everything that occurred over the last 2 years, 3 years. I don't agree with that. Maybe I'm a over over favoring or over optimistic, the eternal optimist, but it is what it is. And this market will take me to where I'm heading, and I think it's very reasonable based on what I see. It's a hell of a business. $36 million on mainnet. It's a hell of a business. And then dare we go to the actual root of the business, which is the AMM DEX, and we'll see what the total deposits are, and then really consider $1.735 billion and going on 4 years. You know, you start a pizza shop down the block, you're not going to be $1 billion business likely ever. If you open 10 pizza shops, 100 pizzas, not going to be $1 billion business. His business has 1.7 billion. I mean, clearly it's been a lot more, and everyone's like, "Oh, it's down so much." The fucking $1.7 billion business created less than 4 years ago. Oh my god! Oh my god! That's crazy. Oh, okay. Thank you very much. Thank you very much. I'm going to stop on. I don't even want to get started about it. People drive me nuts. Horrible takes on social media. Hey, push your old school, make my mind, man. May seem weird, but this is how it always is. Every time, every single time. Because everyone is wrong. The majority don't understand the system. The majority listen to the stories on social media and don't come to their own conclusions and don't write their own stories. So I hear all the stories, but I have my own opinions and I come to my own conclusions. And it's most of the time I don't even align with. I hear it, but I don't just say, okay, that's an interesting story. That's what I believe. I don't adopt stories. I write my own stories, which is literally why I'm able to talk for hours at a time. That's that's why we get to this place. Market is off sides. That's why you get this appreciation. You get this appreciation because people are uh, it's not that assets are mispriced, that's part of it. It's that people are mispositioned, they're underpositioned, and now they're getting into position and they're late. You gotta remember, you gotta really understand that. We're at $79,500. Everyone buying now, 100% of buys right now are late. And this is that saying that Bitcoin folks have is everyone gets Bitcoin at the price they deserve. Everyone buying Bitcoin now is late. They are not early. They were not the forward thinking investor that came to their own conclusions. The only reason they're buying now is because they've heard circulating stories on social media, but Bitcoin is a very macro asset right now. So you're talking about the big banks and micro strategy, macro strategy. And that story has taken time to circulate. And that is clearly affecting the market, causing late buyers. It's not, or I don't even, you don't even need to go back to like 2019, 2020 to say you're super early. This was big opportunity in 22. I mean, Bitcoin was 15K. That was big opportunity. I mean, between 2020 and now, I mean, yes, you could obviously say that like 2010 to 2020 was maximum peak opportunity. And then Ethereum came on the scene, but there was nothing. There was literally nothing in 2019. Barely USDT coming on, and it was like, what the hell are these dollars doing on Ethereum? What did it even mean? It was the weirdest thing. You don't understand. To see stable coins, USDT was so weird in 18 and 19. I mean, I don't even remember when USDT came online, but it was just weird. Nobody understood it. It was so weird. Anyway, and now the narrative for USDC and USDT, that's all post 2020. So that's the whole point. Like 22, at bottom in 22, from a Bitcoin perspective, that was early to for collateral fintech in this space. 23 and 24 was the buying opportunity, probably most closely akin to the early days of Bitcoin and Ethereum. So that's an interesting bifurcation of market. You always have the meme coins, but you have these big collateral instruments, these network tokens, when Ethereum, Solana, blah, blah, years. And then quote unquote what's called Dido, not the chain tokens like Litecoins and XRPs and Cardanos of earlier than 2020 cycle. Talking about fintech, financial technology involving foreign exchange, credit, derivatives, liquidity financing, and dollar liabilities categories, which we talk about a lot lately. That we've isolated over the last couple of years. Shit didn't exist. This is this was because nobody really saw this in 20 and 21. Maybe some super early forward thinkers, but I didn't see this picture that I tell you guys till probably end of end of one. And how do I know that? Um, it come up that easy? Yay, it does come up that easy. So this was the end of 21. End of 21. We literally just spent the last years going absolutely insane. Pool twos. There was no cross chain. Stargate was nothing. Layer zero. You can barely get your capital with uh oh my god, multi-chain XYZ. That XYZ was the original from Andre. Did Andre create everything? I think he did. Um, this was the end of 21, and I this is where we're at pretty much. Seamless cross-chain interop. What is Uniswap talking about? The intents with a cross. A cross is literally screaming seamless cross-chain, and layer zero is literally screaming seamless cross-chain with the OFTs, omni-chain fungible tokens. So is this not the biggest narrative? So if this is what I saw as the biggest narrative at the end of 21, this is still the biggest narrative. So who, or rather more than who, what is investable from a seamless cross-chain perspective? Still Stargate, still Stargate and layer zero, but you really need like is there opportunity with zero? Zero is such a high market cap. So they don't get those multiples. So my sentiment is like 50 to 100 mil market cap assets. That's a crazy number. You catch a 50 to 100 mil market cap asset go to 1 or 10 bill and they get monetized like that. Those are the wins that I want. Imagine those kinds of multiples. Those kinds of multiples are what people are looking for with the meme coins. But imagine that with actual, it's a narrow, and your vested interest is aligned, and people want to own things instead of just dump them on your head. Oh, the horror of actually looking at narrative and understanding the fintech for what it is rather than just gambling. That venture capital and the large actors with big money, they don't want to sit there buying and selling. A lot of folks want to own things and have because they have interest. Therefore, they want to vest their interest. They want to be involved. They want to have skin in the game. It's important to a lot of people, and I've talked about that topic. It's what do you own? Who are you as a person? Owning things is our greatest expression. What do you own? It's meaningful. I mean, this clearly happened, and that really led to VE33 and Andre and Solidly and all the forks and Velodrome and Aerodrome and the Kingdom exchanges. And this is what I talk about when I say if you want to incentivize people to not dump your token from a business standpoint, you got to pay them and you got to pay them well. That's also my pinned tweet, and I think that'll remain my pinned tweet for a long time. This is maybe like Unichain. I don't know. That's not really there yet. That's like Conic and frankly Tsunami. Like seamless cross chain, and it's like you deposit USDC and it just goes to all the chains, and it's constantly moving and constantly rebalancing. I don't know about this. This will take some time because you really need like Uniswaps across intent system and layer zero to really kick off with the OFTs, but because that this is a cross chain arbitrage and balancing the LPs. This is like what DeFi money needs to do to get its cross-chain dollar very stable. And what Tapioca wants to do as well when everything finally comes around with regard to that business, which I think it will. Anywho, pin tweets an oldie but a goodie. How much are you paying weekly? I just want to be different. Is that too much to ask in a sea of what meme coin is hot next week in the hot ball of money rotation? This is a good pin tweet, and that will remain for the foreseeable future. Diego, how are you? Good morning and good all-time high. Certainly is 79.6. It did touch 80,000, and I think it goes through it. Why would it not? It doesn't make any sense. This is an asset people want, and people are paying a premium for it. and they're going to pay a much higher premium over time. It's going to keep going up, and then it's going to come down, up and down, driving people nuts. But it's a collateral, so yeah, and be consistent. Perform the same over time. Be consistent. Be calm. You don't need to be frantic, and that's what changes everything with regard to capital management. Connect the dots. Weekend update. Yes, this is definitely a weekend banana update because things are literally entering the banana mode, banana zone. I called it the weird zone or the butter zone. Apple calls it the banana zone. Uh, All it means is basically people are offsides. They've malinvested, and now they're buying things at a premium and driving things into price discovery, where people are like, "What the hell is the price supposed to be?" And that's just what it is. The hot ball of money rotates, and eventually it goes from the pure degenerate stuff that has no vested interest and no allegiance and will anyone will dump it on you as fast as they can to make a profit to what is of substance and what is reasonable. Oh, because what do you think this bear market bottom? What do you think? Whoever buys it, who's left? This is why bottoms are so interesting. Bottoms tell you who's left. Who's left to sell it after everything that this has been through. The people who still own it, they're not holding it because they want it to go up so they could be, oh, if I could only just get out. Yeah, that's probably a small percent of the ownership, the holders. The vast majority are probably larger actors that bought during the 40-cent OTC. And when this is, 3, 4, 5x from here, and liquidity financing is that much more meaningful, basically cost of capital, buying a dollar worth of incentive, rentals. If you're getting like a buck and a quarter, a buck 50 worth of net incentive from the curve mechanic, that's what they bought it for, as a utility, as a tool. So who sells their tools? That's why liquidity financing is an enterprise. It's not just a speculation on the price point. And for a lot of folks, those big boys who bought the 40-cent OTC, it's not even about the revenue. They're not voting. They don't give a shit. They want to throw money at it and then vote on the LPs that they need because they have respective businesses that they're supporting. You get it? Protocol owners. Think didn't Justin Sun buy some? I don't know. But that's what the OTC was. That was Michael calling up as many folks as he could to try to stabilize the leverage situation. And that stabilized for a bit until that delta neutral strategy he had going on blew out, is what it is. Talk about shaking out the weak hands. Anna said, "Hey Cap, I follow you from 1 year now. Can you please give a rational explanation of why you don't like one of my concentrated positions, cake?" No, there's nothing wrong with cake. Pancake's just fine. Um, I'm just not fond of Binance Smart Chain. That has changed, and I think Binance is quite entrenched from an infrastructure standpoint. And with CZ just not being involved with Binance anymore, I think that's been become institutionalized, and it's just that's accepted piece of financial infrastructure. Binance, that's big. So Cake's fine. Um, I'm more, for instance, everything's relative. I'm more interested in Cake than Uniswap. Uniswap is not investable as I would define it. It pays nothing. So I just think I have things that are more interesting. That's okay. That's my choice from my capital management standpoint and how I construct my portfolio. If that's a concentrated position, that's cool. And here's the thing. In a couple of years, you look back in hindsight and we could compare, but that's not what we're going to do because that's not what people do. Right? back in hindsight and say, "This is how I did." This is not a competition. That for actually, Frank, let me take that. This is a competition against yourself. Measure against yourself. Better. Compound average growth rate. We talked about that recently. And how that CAGR compared to Stan Druckenmiller, 30% for 30,000 years. Or NASDAQ, what, 10, 11, 12%? So, there, against yourself. That's just you all could it's to own everything that I could possibly want to own. It's not possible. If a larger portfolio, like a multi-billion-dollar portfolio, could have exposure, but man, capital management, concentration, no need. 10 of the most incredible investments. Like it's a no-brainer to own these 10 things and be like, I own one and two. Why? Just concentrate. Created bet of the 10 are the best of the incredible investments. Okay? So that is as simple as that. But what matters is your conviction. It's you who has to hold it into the future and why it's an investment and why everyone else is wrong. That's what defines an investor. An investor is when someone has a dinner table story they could tell. They've the portfolio and why, but they right and everyone else is wrong. That is the important qualification for or achievement for an investor. That's what leads to investment success. When everyone else is wrong and you end up being right. Okay. Yes, I know it's the tokenomics and metrics. Enjoy the next couple years because I think Binance is infrastructure. I think Binance Smart Chain will do well. Like for instance, I look for things to invalidate investments. You know what drives me nuts? It's the goddamn price of Binance Smart Chain. Why the hell is it 30 cents a transaction or what the it's very expensive. So I have Thana. I got plenty of Thana exposure. That's cool. I have my exposure to Binance Smart Chain. It's relatively expensive to engage on BSC. For folks' memory, Binance Smart Chain was basically the first EVM chain other than Ethereum mainnet to really get hot back in 2020. Gee, that shit was I was so hot back in 2020. Just for folks, history lesson. Anywho, that I hope that helps Absent. But that's a good. The whole point is that the conversation we'll have again. But that's your portfolio. That's okay. I think you get it. Kazin, much a pleasure, much a pleasure. Nicky Nick, El Capitan, good late morning at this point. Snoke is in the house. How are you? I think the microphone is not working well. Yeah. I mean, my internet's gonna be as good as it's gonna be. I think it's good though. And anyway, that was like 40 minutes ago. So these comments are obviously something late that I'm replying to. But I get to all comments. So if you're on X or on YouTube, post a comment because I'm going to reply to it. Um, I hope it. I hope it stabilized. This was like 20 minutes ago. Um, yeah, the signal is choppy. The wisdom is dripping through though. Blue Demon Scott Bessent is the leading candidate to be nominated by Trump for Treasury Secretary. Very pro Bitcoin. The setup, the political setup is insane. The political setup is insane. I don't even know what to I don't even have words for the political setup. And frankly, the macro setup is insane too. Folks, this hasn't started yet. Oh, pushing through the 200 on the weekly. Guys, to understand this chart right here, you need to understand these charts. And we've been talking about these charts, the DXY and the move indicator, for some years now. So with the political setup and the macro setup, oh my God, that's why you don't need to take excessive risk and have a 0.5% chance of success with a meme coin when you can own investment grade fintech in an environment that's likely to monetize this fintech to insane valuations, because it's not insane valuations. If you monetize a 10 million to 100 million dollar protocol to 1, 10, or 100 billion dollars, that's just large cap. That's like mid cap to large cap equity. Okay? So we're literally just monetizing fintech to equities standard capitalization levels. Boggles my mind because once you see 10, 50, 100 mil market cap, people are like, oh, that is a massive market cap in crypto land. And this is just such microscopic capitalization compared to the large cap in equities land. Van Guy, good morning from X. Much a pleasure. Much a pleasure. Thank you for stopping by from X. Please, if anyone's on X or on YouTube, please feel welcome to ask any questions. We're towards the end of questions, and I want to look at DeFi Llama, and maybe I'll go over Move and DXY a little bit. But if you have questions, those are my priority. Happy Sunday, Cap. Tuning in late, we'll have to rewind and watch from start. Fortunately, it's all recorded and will always be here. Morning, Cap. Mr. Barada's in the house. Good morning indeed. So, historically, if you zoom out to the monthly on the dollar, here's your bull markets. Let's go to, yeah, that's the best perspective. So here's your bull markets. No, I want to draw. I don't want to circle. Below the weekly 200. Those are your previous two bull markets in the crypto space. And we're going back literally to like 16, 17 cycle. Okay, ladies and gentlemen, look at the size of this chart. Your bull markets in this crypto space are microscopic. They mean nothing. They were nothing. They were a blip, a blip on the radar of all this shit going on this planet. So the most important thing I take away from that is it's so much bigger than people may think. So much bigger than certainly the majority think. We're talking about the potential monetization of a whole new asset class, as folks talk about, but of global fintech. That doesn't exist in traditional finance. You have global companies, but they have different execution, different implementation in different continents, in different markets and jurisdictions. But we're finally talking about a fintech business that is truly global. It is just one business and it is everywhere, accessible everywhere to everyone. This has never occurred before. So you're literally watching the emergence of banks that make a traditional bank seem deprecated and irrelevant. And that's what I take away from a chart like this, that it's all just beginning and most don't get it because This has to cycle. If this doesn't cycle down, um, it's the end. The dollar can't go up. It needs to go down. And frankly, the dollar going down isn't the end of the dollar either. Because I'm not going to go into it. That's just it. Dollar doesn't die with this price going down. The dollar. That's why I say this has to go down because if the dollar keeps going up, that's the death of the dollar. That's what tells you that the dollar is dying. This going up tells you that countries around the world are paying back their debt and they're getting off the dollar. You understand that? For the world to get off the dollar, that means they're paying off their debts, and that'll drive the price of the dollar through the moon. So, in order for the system to really continue, this is going to roll over, and that is going to be a very, very secular cycle, which is not cyclical. Cyclical is relatively short term, secular is like a decade plus. So, that's generally my expectation, and my expectation stands strong. Over the next 10, 15 years, dollar down. As the dollar comes down, whole structure of the system changes. So I'd probably say I expect relative strength on the dollar in the short term. Maybe we get back down to 100 again. That bounce off 100 was quite surreal, and you can see it right here in the monthly 50. This bounce right here. To get a little bit more zoomed in on that 50, let's go to like the daily. Let's go to the weekly. Yeah, that was. It's like it's gonna fall through. It's gonna fall through. I literally bounced straight back up. Motherfuckers. They need to get the dollar down, and that juices global liquidity, and that allows the world to engage in outperformance. It's the whole point of capital management is to outperform risk-free, the risk-free rate of return. So when this comes down, that frees up the capital to outperform risk-free. And also, for governments to get this down, they need to cut rates. So the U.S. keeps cutting rates, eventually drives the value of the dollar down. If not cutting rates, if that's not enough, they have to do um, other approaches, and they will. But I think it'll be stronger. I think the dollar maybe gets to like I don't know 95 to 100. But I expect relative support of the dollar. But I think the move is what to look at. Once this thing starts to get crushed, that's when you start to see weird shit. Bitcoin and Ethereum are the prime candidates to look at from a crypto space perspective to see what's going absolutely apeshit and what's getting really weird. But you'll see it as a leading indicator on move up sharply. See it, you see move down to 80s, break the lower low from the 24 lows. Oh man, oh man, you see the 80s. That's when you just like, but that what's the most important thing to do? When you see the 80s, you need done. You need to be done. You sit back and like, Cap said it was going to hit the 80s, and now things are going weird. That's going up. That's going up. Question is, what does the cap do when it's going up? I'm working on right about now DeFi money, drop collateral, gaining points, gaining exposure, provide liquidity, dollar cost average, sure, build a cash position. As folks know, of late, I've been describing the cash position as Bitcoin, Ethereum, and dollar stablecoins. That's cash. So build your cash position from your income. Anyway, that's probably a decent place maybe to pick up the next stream is what we've discussed a lot of the structure of a portfolio, cash and investments. Cash doesn't do anything, it doesn't make any money. It appreciates and it's volatile, and That's where I compartmentalize Bitcoin and anything that's liquid for that matter, especially stable coins. But then the investments, what is investment grade? And what produces the cash flows that you can have more cash. That's a well-structured portfolio. Cash and so if you guys want to go over that topic again, don't forget to ask questions next time. Hello, Adam. How are you, my friend? Any insight into the Tron stablecoin narrative? Only chain comparable to mainnet. Tron is Tether. Tron is the network that is using Tether to engage in many, many billions of dollars worth of financial activity out in the East. Goes right past borders. It's a ubiquitous dollar currency unit where you don't have to change the denomination. You just send a dollar from Singapore to Taiwan. Blink of an eye. No depositing into a bank, waiting for exchanges, exchange rates. No middlemen. That's what Tron is. Um, Part of the equation. I don't know if Tron ever catches the DeFi hype. It doesn't really need to if it has effective cross chain. But that's why cross chain is everything. Cross chain really hits stride, and it's just seamless cross chain. Basically, what layer zero supports, it's literally like 30 seconds. You go from chain to chain. Boom. I mean, this is really crazy. The bridge, it's like boom, boom. Not Stargate. This isn't Stargate where you have to find liquidity. Just you're going from here to here, here, to here. Real omni-chain token is just really wild to see. And Mim has it as well. So I think this is going to be a very interesting cycle uh, because we have potentially three cross-chain, seamless cross-chain dollars uh, as Tap figures out what the hell it's doing. But between Mim, the money, and and, and what is it, OUSD, tapioca. I mean, they're going to need some time to catch some stride because it doesn't happen instantly. And DeFi money's been going for like 3+ months, and there's only a couple $1 million in circulation. So it takes some time. It's only $1.42 million in circulation. Um, how much abracadabra's out there? Um, or how much MIM is out there rather? 100 mil, and that's 3 years old, give or take. 2+, 3 years old. 100 mil. That's interesting. That's a lot of money. Let's go over to stablecoins real quick. $178 billion worth of stablecoins. That's an uptick. Wow. 173, 178. That's $5 billion in the last week. Wow. Was it on mainnet? Let's see. Yeah, look at that. Is this that Tron swap that they were talking about? A solid bump in billions on mainnet. You realize, you guys understand that the amount of dollars that just flowed into mainnet in a week is greater than all the dollars that exist on Solana, on Base, on all the chains that everyone says are the next big thing. The bump, the bump in stable coins on mainnet. is the entire capitalization of other chains. So that is probably one of the biggest things folks need to appreciate about how insanely useless a lot of stories are on social media. Social media. So there's a lot of exciting things to do on Solana and a lot of exciting things to do on all the L2s, including Base, which is an optimistic super chain, which shouldn't be diminished context of mode and fractal and all the other optimistic super chains. But there's nothing compared to mainnet. These are the billions. These are the big billions. $3.62 billion. It's literally down 3.52% in a week. And this is a positive 6.86% week over week change. Billions of dollars? That's crazy. So, I mean, look at Tron though, 60 bill. Marginal negative sum. Arbitrum. Let's take a look at. Ooh, yeah. I want to see. I want to see Arbitrum and Optimism catch up. So base has been hot, but Arbitrum and Optimism. I mean, frankly, Arbitrum's been in the lead. Arbitrum still has significantly more dollar capitalization than base. Base has only 3.632, and Arbitrum has 4 point basically 4.58. That is big difference, almost $1 billion. What does Fractal have? Microscopic. What does Mode? What does Mode have? Probably a couple mil. 6 mil. Microscopic. Pick anything. Solana, 4 bill. I mean, literally, that's what I'm saying. The amount of dollars that flowed into Ethereum mainnet is bigger than Solana in the last week. So you gotta understand the scale and scope of what's going to play out on Ethereum mainnet. No, the big boys that are throwing around 100 mil don't give a shit about $100 transaction fee. It's not even something they hesitate on. It's not a blip or ooh, it's nothing. It's nothing. And that's where the big money is. And that's where if the big money's there, that's where the big monetization will be. Okay? And why are they paying those fees? Because that's where they're most comfortable. That's where things are trusted. That's where there's $100 million deposit, and folks are like, all right, it's Ethereum mainnet. I'm not dealing with rollups and multi-sigs and whatnot, even though Optimism and Arbitrum are pretty damn close to achieving what back in 21, like, oh my God, no way. I did this back in 2021. Oh my God, the conversation, where we've come now, from where we were, it's going to be interesting hindsight from 2028. Good stuff, Adam. Good stuff. Man, guys, I checked the money CRVUSD pool on base, and it takes a 10K purchase of money to push it well above peg. A little effective altruism to reduce rates and make borrowing on base attractive again. Maybe we need to buy on multiple. Yes, the reason why it's off balance is because of because you see it's cheap. But bear in mind, it's not really that cheap. It's 0.995, but that's the beauty of the interest rates, and that's why it causes appreciation. Interest rates up, designed to drive the price of money up. It's pretty remarkable thus far, considering uh, considering the arbitrage bots are probably likely not in place, and the cross-chain collateral zaps are not released yet. So this is very interesting, in my opinion. To such a degree that between this and AWA's cross curve, as much as I have a high opinion, very high opinion of that protocol, considering its metrics and what it's doing with Phantom, I've just focused on this. And that's okay. You don't have to own everything. And that was a hard choice because I it's easy enough to deposit capital in the cross curve into their LPs. It's like boom, boom, boom. Easy enough. And what, 146% on stables? Easy enough. But dollars are the bigger business. And that's okay. It's okay. And I don't I don't feel like I'm missing out. Don't feel like you're missing out. Never do that to yourself. I want these points. I think these points could be very interesting because I understand what dollars are and I understand what OFTs are and I understand what seamless cross-chain liquidity is. And I know this could be potentially bridged in anything. Why? Because an OFT in dollars, you could instantly swap. As long as there's liquidity against the dollar, you could swap from one thing, token on one chain to a token on another chain, vis-a-vis the omni-chain fungible dollar currency unit. So that kind of changes bridging infrastructure, but it is using the cross-chain messaging infrastructure of layer zero. So, um, holy shit, I didn't expect last week's points to be 941. That's cool. And these extra V curve points, the alignment. So that's what also piques my interest. I mean, clearly, A1 and cross curve are aligned with curves. It is literally using curves infrastructure. So that's a big, big integration with seamless cross chain narrative into Curve Federation narrative. So that's pretty cool. Um, but this being a dollar and it's that tightly coupled that BE curve gets points. It's not derivatives of curve. It's literally base VE curve. So that I found very interesting. That is a strong expression of alignment. So anywho, so that's my opinion. Look, there's no money being made here. It's just collateral management. It's just collateral deposits. You deposit, pick your poison. WST ETH, CB ETH. It's large interest rates, so you probably don't want to deposit collateral on base. Um, unfortunately, until arbiters come online and balance, as Van Geith is talking about, balance the LPs associated with the money supply. But clearly, those LPs are balanced on optimism, and that's where I've favored my deposits. WETH and WBTC. This is literally sitting at 112% collateralization. I don't, I don't mess around. I don't do much leverage. Albeit there is leverage here. Why? Because WBTC I'm leveraging it to WETH. And frankly, this CBETH and WETH, this is all leverage. But I don't take leverage with that's at 187 fine. I'm gonna probably have to zap this out and move this collateral over and concentrate. But I don't take liquidation risk. I have a little leverage, but I don't take liquidation risk. I don't like that. IF, do you think Tapioca can make a comeback? Yes, in my opinion. Why not? I was one of the earliest investors in Tapioca, and I would like them to make a comeback, which means they didn't even launch yet. So maybe that was all a test. Because they launched their new token, run a new LP, bootstrap LBP. Just run it. And there'll be a lot of people that are salty, a lot of people that are angry, and they probably don't own it anymore. Most of the owners are probably vested interest, the original investors and folks that had real strong long-term alignment. Team gave up some of their supply, they gather some options, they run it through an LBP, which is literally all part of discussing as the relaunch. They launched their new token because they have to swap that out. And it mainnet, and they launched mainnet, and it goes well. So that's my expectation. I think it will do very well. DA Advisor, will Curve remain the leading stablecoin DEX on mainnet? So that's complicated. I don't know, but that's not what's important. There's a much more larger structure in play. and I think there's room for different types of swaps. And on mainnet, I don't think mainnet here's an interesting twist. I don't think mainnet remains the primary destination for swapping. Too expensive. Can't do the volume. So, for instance, um, execute a transaction on mainnet, but the swap occurs on Arbitrum, Optimism, or an optimistic superchain. Because folks will be like, why is he not saying base? No, it could be any of the optimistic superchains. You're just finding liquidity. So what they need in that regard is the seamless cross chain. So the seamless cross chain messaging. So you literally your swap on mainnet is executes a cross chain message, and you end up getting the transaction executed on Optimism, and the resulting tokens just come back across the bridge to mainnet. So that's what I've said for quite some time. That at some point you're not going to need to know what chain you're operating on. It's seamless cross chain. And that is probably the best answer to such a question. So I'm interested what curves, dexes do, because they've picked up on optimism. They picked up off mainnet, but it's not their most important offering. So I kind of see their dex as just a full stack support for their dollar. The dollar is such a larger business. It's such a larger business than foreign exchange. Foreign exchange being a DEX, an AMM, or an exchange, have whatever you want to call it. That's foreign exchange, ladies and gentlemen, in traditional financial talk. The capacity to exchange one asset, one denomination to another. The dollar is such a larger business than that by any measure. So credit, and I think that's exactly what CRVUSD is, and that's what I think I'm most excited about to see what happens in 2024 and what I mean. Literally just released SCRVUSD. I'm excited for all the pairs. They come on, all the SCRVUSD pairs are just getting gauges. This is going to be interesting. I look forward to the SCRVUSD S money gauge, but that can't happen right now. DeFi money's got a couple of things to put into place first. They need a way to make sure uh, that money is arbitraged. And that is not necessarily the simplest thing. Cross chain. The reason it works, I don't know if it works that well for Curve because you can't mint money, therefore you can't pay back money on an L2. You literally have to bridge it. So it works. Curve was working well because it's freaking Curve, and all the bots, all of them, the arbitrage bots, they're arbitraging the shit out of it, and it works well. I mean, the price of Curve USD is extraordinary. It's just really, really nicely priced. 0.995. And look at those interest rates. Why the hell $64 million paying those interest rates? That's the question. I mean, look at this business. This business is what, a year old? $64 million business? Not even. It's more. This is a $127 million business because that's the collateral. That's the TVL, the deposits. It's a 1-year-old business with 120 worth $127 million. Oh my God, folks have got so wrong. Oh, wrong. It's scary. Hope that helps. DA advisor, my friend. Basket Cappy, you got more points than you know what to do with TGE about to cook. I am very, very excited. Because right now these points are just going to keep cooking. I'm late. I know I'm late. I missed months. I'm doing that catch up trade right now. I mean, it's not even like it's too much deposits. It's just that I have the VE curve. I missed all of that, but obviously back in 36, I missed literally 36 epochs, which is like 90 days, 3 months. Fuck, fuck. But these points are going to catch up hopefully quick. Every 3 days, it'll be another 2.5 mil, give or take. And I think every time, I think I bump the leverage because that's what I should be doing. I think I'm going to repay this. I'll close the loan. I'll zap it closed because this is really cool. Great. I like that feature. And then I'll pop it over here. That'll collateralize this up pretty damn high. This will probably be like 180%. I'll borrow another like 2 grand. See if I, yeah, look, I can borrow another. No, that's 200. I can't even buy. Oh, tell me they don't even have supply. Only $948. Earn, no. Mint, no. Advanced, op, left to borrow. No, there's a lot of WE. Huh. Why can't I borrow? 612,000. I just want like 1 or 2 grand. And then you throw it in. So this is how you maximize these points. Then you just throw it in like CRVUSD money because it has a 3x multiplier, and that's what's really cranking out the points. You just throw it in a lock. Now, obviously, you have to be really cognizant of how you manage this because if you're locking up LP, you're not getting it out for a month, which means you better make sure your collateral is effectively over collateralized. And you could always zap it close, but then you're taking a loss on your collateral, and I don't want to lose my collateral. The amount of WP that's in there, that is just that's the number I want. I don't want to mess with that at all. I'm not force closing that. But this WETH and CBETH, that's all leverage. That's okay. I'll force close that. All that matters is the dollar denomination there anyway. Anywho, Cap, invalidate the superchain thesis such that Velo doesn't achieve the same growth as Arrow. I'm thinking this is closely linked to Kraken, KBTC, and its Ink chain. How can Velo fail? Okay, so you want to do the contrarian take. Ink doesn't turn out as big as base. Kraken is not as popular as base. Kraken is not popular as Coinbase. So it's just not as exciting, and it's just a boring launch. Um, that's the thing about Velodrome, and that's the thing about the way I look at these markets. Is Aerodrome and Base and Coinbase, that's it? In the planet? That seems weird. And I don't like one because humanity doesn't operate with ones. Humanity operates in pairs. Team A, Team B. Republicans, Democrats. Left, right. It's built into nature, you know, binary. There's always two or more, and more happens to be unstable. So it's like the three body problem, that Netflix movie that was really good, by the way. Um, so in that regard, Velodrome is a much better investment than Airage from a potential standpoint. Like we understand the potential of Coinbase, great, and that's gives and we can have an expression there vis-a-vis Aerodrome. But what's the potential of the optimistic superchain? I have no idea. The potential is how many chains? Who launches a chain? How many chains are there going to be in 10 years? And Velodrome is across all of them, however many launch. So you're talking about potential chain expansion. The potential is enormous compared to um, just base. So that presents an interesting consideration. Is it bad to own Aerodrome? Hell no, that's been the best investment for so many folks. If you were able to get Aerodrome at 10 to 50 cents, great investment. Uh, but for myself, have opted for better. And what I define as better matters to me. And it doesn't matter what anyone else thinks. So I think Velodrome is better because of exposure. the entire optimistic super chain other than base because that was a one-off. And I understand why we're in this situation and why I cannot have exposure to base vis-a-vis vis-a-vis velodrome, and that's okay. I live with that. It is what it is. So, but that's my sentiment there. I don't think that's the thing. There's no fail for velodrome, meaning it's immutable. It's disinflationary. It is, frankly, it's everything that Andre said. It's actually short-sighted compared to what Solidly had in mind. So I'm kind of interested in what the hell plays out on Sonic. Very interested. So I want to see what Andre either directly finances or indirectly encourages to be built. And maybe that comes on a velodrome. I don't know, but like that's one reason I like the kingdom because they'll pretty much be offering exposure to Sonic. Um, so Ram as the center of the kingdom gives you your drop on its deployment chain. So when Ram's kingdom expands to Sonic, you get the airdrop based on your Ramses holdings. Maybe that's a reason why. Maybe that's a reason. And by the way, this is Insta DApp. This is because of what DA Advisor was talking about the other day. Um, is their liquid AMM. Look at those rips, folks. Are like, I want to buy meme coins. Meanwhile, this is up 400% in like a week or two. I mean, come on, it's literally like 2.5 weeks, and it's up from $1 to $4. That's insane. Those are insane multiples. So, but what was RAM at? Did Yeah, RAM with a 40% bump. Ooh. Yeah, but look at that bump off the bottom. It reminds me of Velodrome. Just a bump off the bottom. It's just, there's nothing there. Obviously, the supply has increased a lot. But this gives you your exposure to wherever the kingdom expands to. And then you go over to Velo. Got to zoom out. Strange. Oh, that's just liquidity on whatever deposit this is. Though. Interesting that's what's the liquidity here? 800K. Oh, this has 700K. Let's go to something with more depth. I think I would have to go to deck screener. No, here, 4.17 mil. Oh, that's the whole damn thing. Anywho, here, liquidity, 1, 2 mil. There you go. There you go. It looks literally like the damn kingdom. Quite remarkable. Can I overlay it? So, no, it's not as good as a trading view user interface. Doesn't give you all the features. Okay, but you saw that. Look at the structure. Look at the structure, and then you look at Ramses. It's literally a very similar structure. It's just right at the bottom. It's this giant impulse up, complete retrace, and you're literally at zero. Look at that. You're literally at zero line. This entire move, a 40% move to the upside, is literally a mean regression to zero line. From a level standpoint, you can't put any moving averages on this thing. You just can't at all. We break 80K already? Come on. Look at that Ethereum price action, 3,200. That's good to see. That's why my collateralization is just 187%. Anywho, um, so that's the thing about. I mean, you could always say, Van Guy, like um, invalidation, like Arbitrum becomes much more prominent, stronger in the lead. Maybe Ethereum's invalidated, and then Solana, which was having network issues yesterday, or flips Ethereum. I mean, high opinion of Solana. It's not Um, and I do believe in lindiness and momentum. So what is in the lead stays in the lead more often than not. Very rarely are things disrupted. So when Aerodrome flipped Uniswap, that was a massive, 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 massive deal. And when Velodrome flipped Uniswap on Optimism, that is a massive, massive, massive deal. So that is something to consider. Um, see what Uniswap cooks up. They are never counted out. That they have lendiness like that's like DeFi lendiness, like Bitcoin is lending to crypto. They're the original exchange from a DeFi standpoint. The Uniswap was wild back in 2019, late 2019. Crazy. He won. It's hard to check out liquidity for Uniswap. Once that data there, it was interesting. Maybe I could find it real quick. I did a post a while back. Maybe I could find it that easily. That would be nice. Oh, come on. Didn't I add myself? No. Advanced search. Maybe I'll find this. This is recent. This was recent. 2019 was crazy. I mean, that's really half the reason I have the sentiment I do is because it's the perspective from 2019. I really want to find that post. Um, UNIV1 2019. Oh, that's why. Any of these words. Any of these words. All of these words. Any of these words. Exactly 1 2019. And here, search. Come on, baby. Oh my God, 2019, Digibyte. Oh my God. Brooks don't know. I wrote that. Oh man, that was wild. I did a lot of work on that app. Famous cross chain. Uniswap 1 inch. I had a great post. I had a great post, and I don't know where it is. Wow, 2019 Digibyte, 2018. Those some good days. Oh my God, I was so young. I had much more hair than I do now. I love these old posts. I haven't looked at them in a long time. Uniswap. Let's take out Uniswap. I want to find that damn post. Um, DeFi, DeFi? No, 2019. 2019. Maybe just V1. V1 2019. This was a pinned post for quite some time. Anywho, all right, fine. I can't find it. 430 people. Yeah, it was pretty bear market. There was pretty light, and now we got 775 people on. I appreciate all of you guys. Bad Cadet, we'll keep it going and we'll wrap this up in a couple minutes. So there's a few active loans. I don't know what the distribution of their TGE will look like. Imagine they will drop a percent to VE curve holders generally also. Yes, that's my expectation, as well as points which are favoring or at least allocating towards VE curve participants as well. So I very much look forward to what kind of exposure I could get to a seamless cross-chain, omni-chain dollar that's using the CRVUSD tech stack that not only uh, is aligned in a production setting, like there's a synergy because of their pegs, their upward peg management, the peg keepers, would be weird. Um, but also from uh, a recognition standpoint. So it's a licensed for. So there's a lot of kickbacks towards the Curve community. So that's going to be interesting, in my opinion. Oh, certainly still early. Folks need to understand that it hasn't started yet. Move hasn't rolled over yet, and Move is a leading indicator of systemic liquidity. What does that mean? What does that mean? I'll wrap up maybe on this thought. So when Move rolls over to 80, that's equivalent to the Ave health factor of the planet going from 2 to 5. Okay? So Move going down means everyone is becoming more over collateralized, which means the whole system could borrow more capital. So that means people borrow more capital, and that takes time because we're talking about a slow moving freight chain at a global level. So the capital gets borrowed, which is basically dollars being printed, and those dollars get spent into existence and they start to circulate. And in a quarter, 1 month to a quarter, 1 to 3 months, things start to get weird. And it's forward-looking indicator on weirdness. September of 2020. When did things start to get weird? Or rather, maybe that was a top indicator. I don't know. Conceptually, uh, I stand by move down. Things get weird in short order, 1 to 3 months. Move down, DXY down, and DXY is up. That bounce off the 200 on the weekly was unexpected, but that came quick. There was uncertainty with the election. And now that the election is concluded, did you know that there was an interesting conversation between JD Vance and Powell? And JD was talking about the only way you're going to get your repatriation of supply chain is if the dollar was weaker. And that's a very interesting mechanic. The dollar needs to be weak to favor exports rather than imports, with a strong dollar that favors importing shit into this country, which favors globalization, which is literally what they're trying to unwind. They want less reliance on foreign nations, less globalization. They want more repatriation. And the only way that is executed from an economic standpoint is with a weaker dollar. That means something structural has to give with how they are managing relative currency valuations. All right, on a Sunday special, I hope that helps. I know things are going to be interesting. Things are going to get a little bit frantic for folks. Try and remain calm, cool, collected. And there's a place for you to vent and ask questions and talk about these topics. And that's not just me talking. There's a stream here, and you guys from X and YouTube, please feel very welcome to vent and run your ideas. And that's the only way you're able to be calm about your ideas and really understand them. So that this is a safe space, ladies and gentlemen, for your financial craziness to be understood and worked out. Thing is like you have a muscle cramp and you got to work it out. And then you're like, oh, that's better. So if you got a crazy financial cramp, work it out. And then it's like, oh, that's better. I understand now. Something like that. Thank you, Tape Pusher, Van Guy, Sir Joe Present, Athletic Concept, Hola Cap. I've been leverage trading, trying to increase my dollar amount. I have positions in Curve, Convex, but they are all sub 800. Looking for opinion. Well, leverage is technicals. You're making speculative bets on mm, um, measured moves. Why leverage? Why leverage curve and convex? You probably want to, because there's very low liquidity on those guys. I mean, they can make outsized moves, but it's all technicals. So you can make all this with Bitcoin, and then you take all your leverage, but you're going to have to go into short-term time frames, and that's something that I do not really delve into. You're going down to like, you got to even go lower than 30 men. I mean, where are we? I mean, this thing looks like it's topping out at 80. I don't see it going too much higher here because look at that from a weekly candle. You look for me. So where's ceiling? You don't know, but see a retest of the low 70s, 75 to 73. I mean, from a weekly perspective, we never retested the high, so that doesn't really make much sense. But the question is, where does it go? Like from a top perspective, does it go to 89 and then you get some chop and some weakness and a breakdown to 73, and then you start to see consolidation and strength again? I mean, look what we just went through between March until November. So you see, here, look, shitty drawing. See continued breakout, 100, chop, weakness. Maybe it goes up again, and then you finally get your dump, and then up, and then it goes up again to another level. Maybe not to 140. That's not the best sloppy drawing. You can't take anything from this drawing, but the point is, at some point, it's healthy to find that retest back into the previous resistance, and that was a meaningful resistance for quite a period of time, maybe even a little bit lower. This entire line of resistance at about 69.70. So it'd be nice to see a retest from the top side. So it's not the best advice from a trading perspective, but hope that helps. Hope that helps. Last couple quick comments, and I'll wrap it up. I promise. Kristen John, do you have don't you have the best of both worlds with a strong dollar and increased domestic production for domestic consumption? You can buy more stuff. Um, well, this is the twin deficit complexity. Um, we need to export dollars out of the country, otherwise the dollar gets too strong, and we don't have nearly enough domestic production. For instance, we import almost 100% of all critical materials from China, natural resources, lithium and stuff. And it'll take another 5, 10 years to fully get that, you know, refining capacity online here in the Western Hemisphere. Um, and just all the manufacturing has been outsourced because it's so cheap. The dollar's been so strong, and I think they know they need to adjust that. We're just looking at it from a repercussion standpoint. Everything or so much has been outsourced. Why? Strong dollar. If you want it to be insourced, you need the weaker dollar. And the weaker dollar also does very interesting things from a global liquidity standpoint that will also drive capital out of the United States into international investments. So the strong dollar clearly has caused the rapid appreciation of US equity markets, so on and so forth. But eventually it's too strong and it crashes things, which is why, like other countries, for instance, if you go to the DXY and you zoom out to the 6 months chart, which is why historically you get this presentation. It crashes the world. If the dollar is too strong and everything has been exported and other countries can't finance their debt and their currency is literally too weak, there's no more imports into the United States because nothing's operating there outside the country. It's literally sputtering and potentially failing. And that's why we've had the cyclicality a couple of times historically, 1984 and .com. And then they systematically, structurally devalued the dollar. So that's generally my perspective heading into the 2035. You need decade of dollar depreciation, dollar devaluation, in order to allow the global financial system to expand. I mean, it just makes sense. Hope that helps. Athletic concept, no leverage, other assets cap. Yeah, but leverage. As everyone always says, if you got 1%, 2% of a portfolio, and you're making some leverage bets, it's all good. Um, it's simple as that. And there's more than just convex and curve, for what it's worth. Those just happen to be things that I think are very, uh, very core to what is meaningful in these crypto markets. Um, from a fintech standpoint, from a banking standpoint, from a dollar liability standpoint. Just I don't see any way to argue that they are not pillars of the crypto space. But there's much more, and there's the path where things head. It's not nothing's guaranteed about that, which means what are most used AMMs? What are the most used chains? What are the most used credit venues? I mean, we see where Aave is heading. That should be very institutional. Big capital will deposit, excess liquidity, and then other big capital will borrow. And Aave is very interesting, especially with Donald Trump story, with that platform that he used or that he forked off of Aave, whatever the hell the name of it, Comic or something like that. So that's you can't just say one or two things are the most important. There are many things that are very important. Anyhow, China needs a weak dollar because they rely on exports. Yes. Well, the strong dollar, they need a weak currency there. Okay, so think about it like that. U.S. has a domestic market to buy goods. Yes, think about it from their currency perspective. They need a weak currency so that is more favorable to export their goods and services. And they're going to have to devalue their shit. Otherwise, how are they going to cause the inflation they need? Literally need the deflationary impulse. That check this out. Everybody, don't look at the growth back into 80 from 87, but look where China is. Oh, goodness gracious. They are going to need to use crap out of their system because that, ladies and gentlemen, is a rejection from the 200 on the monthly and a rejection from the 50. Oh, man, China is going to devalue currency with what's a strong dollar. I would argue that the US will have to counter and somehow control the excessive strain of the dollar. That should, in my opinion, result in a relatively strong dollar heading into the future, 95 to 100, and the weirdness that goes along with a weakening dollar because China will probably have to devalue the system out of this deflationary trend. But I like your point with all of that. And John, what if the dollar does like a 3x? What will happen to crypto? Depends because it's all knock-on effects. The dollar does a 3x, then no country on the planet could pay back their debt. What does that mean? So let's put this dollar's worth one and it goes to two, and Japan imports food at one and the dollar just went to two. It is now 100% more expensive to buy anything in Japan. So that's why an excessively strong dollar is devastatingly inflationary for countries that are importing things dollar denominated. Same with debt. So if Japan has X amount of debt to pay in dollars, but they make all their money in yen, and the dollar just went up in value 3x. Now all of a sudden they have to make 3x as much revenue in yen to buy the same amount of dollars to pay. So that's why excessive dollar strength basically collapses the entire system. I don't know about crypto. I'd be more worried about having no imports and having a collapsing global financial system with a dollar at 3x from here, for what it's worth. Weaker dollar is more likely. I'm just wondering what happens when they want to stop adding exponential debt. How do you weaken the dollar? The only way they can dollar, that's what swap lines do. That's why every time you see, like a Money Matters tweet where Bank of Japan is providing dollar liquidity against pooled collateral, they're printing dollars. It's a euro dollar type of instrument. Um, then it's all over. So I don't know how they get out of this from a structural standpoint, other than the best person to think things through in that regard is like what Raul talks about. Um, there's only one way forward with regard to keeping things going and preventing Immortan Joe from becoming our president, like total frick chaos, is the debts need to be paid. Because if debts don't get paid, the whole system starts having a seizure, collapsing and imploding in on itself. Um, what's most important is that's not today. It's not good. It wouldn't be good. And it's the end of normalcy. It's when you wake up in the morning and everything is weird in a bad way. That's what happens. And in order for the can to get kicked, the dollar needs to be weaker from here. Hope that helps. Don't we need to add like 3 trillion a year in debt more? The U.S. in 2024 has had to refinance $10.8 trillion and is running whatever. It's a $1.8 trillion budget deficit or whatever the hell it is. There's massive refinancing in 2024. Uh, that's something I talked about earlier this year. Something like $13.6 trillion needed to come out of the Treasury Department in order to balance the books just for 2024. Uh, so the deficit's massive, Christian, as you say. We have to keep adding trillions a year to save the world from starvation. But do people have the guts to stomach this much deficit spending? They, you may hear it and understand it to a degree. The general public knows nothing of what we speak. And we just had a presidential election, and nobody asked anybody what they're going to do about $100+ billion on basically dollar printing, treasury. Nobody, no one asked that question. Nobody understands this. This is unspoken. This conversation that we're having right now is a minority of a minority of a minority. No one knows about this, especially the general public. Okay, so that the just important to know. People know they hate inflation and they think the solution is a strong dollar. Oh my goodness. Um, partially is strong dollar makes imports cheaper. Globalization did allow us to these deficits. So that's literally what exporting everything outside the country did. Strong dollar allowed these cheap imports, which is why they had inflation problems between 2010 and 2020. Do you remember the headlines? They couldn't get inflation up. Ah, okay, that was an interesting one. Um, people hate inflation, but then they think this. They don't know what the solution is. The solution is domestic manufacturing, because then that eliminates all shipping frictions. From an international standpoint, you throw things on trains and buses. We have decent infrastructure for that. Nothing like other countries, but it's there. To get prices down, you need to increase supply. Simple as that. Or cause people to stop buying things, which is basically make them broke and unemployed. We don't want that, do we? I don't think so at all. People know they hate inflation. I nailed that one. Adam, impressive long stream cap. If you have the energy, do you think there's any substance in Musk's Doge plan? I would love that. I love change, and I love when change makes people feel uncomfortable. I think that would be lovely to see. I don't understand, you know, Kamala's talking points were so populist, catering to like a non-economically interested part of the population. It was all the social matters, which are very important matters, but that's all she talked about. Didn't talk about economics for whatever reason. So, and the result of the election is clear that the majority of the population favored the economic talking points, and like for instance, the wars in Ukraine and the complexity in the Middle East with Israel. That was that's what this election was. It was a vote against that. The social matters that are so important to the folks that very much wanted Kamala elected were less important as compared to the economics of the situation. And that's a very simple, um, unopinionated observation of the results of the election. So I am very much looking forward to um, what Musk has said about efficiency. Great deal of, and I angered by the politicians that trade. This look, all the things that anger me about the government, and things that anger everyone. So I like that very much. I'm not a Musk fan. I like Tesla. That's cool. Come on, these cars are cool. The fuck doesn't like a rocket that lands itself? Cool shit. You don't have to be a fanatic about things to like things. So I happen to like this idea. Sounds good. Christian, the president of Cantor Fitzgerald, had an interview with Pomp. He's working with Elon to cut spending. Yeah, that's pretty cool. That's what Adam's talking about. Yep, yep. But they also want to cut taxes as well. I don't like income tax. And that statement is, what does the government do for money? Then the answer is, the fuck did they spend so much money for that they need to go into the pockets of the general public? So they do this to themselves, but you can't cut off income tax because then you really fuck up the budget. And Trump's like, all right, we'll tariff our way out of it, but there's a whole bunch of implications to that. The million and one knock-on effects that how many people work at the Fed? Like 10,000 economists. And what do? That's all they do. Knock-on effects. They're all trying to figure out what the hell is going to happen if this, and this happens. It's all ripple effects, dominoes. It's a knock-on. So how do you make these structural changes to the system? I don't know, but I like them bucking the trend and them asking how can we potentially change the system. Very interesting. Um, maybe Trump's plan to cancel income taxes. Anything's feasible. The question is, how do you balance it? Because you need to do something to balance and get the income. And clearly, a tariff would get the income, but what does that do to supply and demand? What does that do to inflationary pressures, consumer price inflationary pressures? What does that do to the twin situation for the U.S.? What does that do for, more explicitly, the capacity for the U.S. to export dollars? So if everything's more expensive overseas, and that's driving domestic manufacturing, which is akin to a weakening dollar, uh, how does the rest of the world get dollars to be service the amount of dollar denominated debt that it has built over the last 50 years? That could be stabilizing from a global economic standpoint. That may warrant like some sort of global program. I don't know. That's potential train of thought that must be entertained in order to figure these complexities out. That's why Fed has 10 bajillion economists to think these through. Trump might move toward a print-based strategy to finance the government. No, 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 no. You can't just increase money supply. See, the thing is, all that M0 printing, it seems like a lot, but it's strategic. I don't think it's as malicious as people think, because our inflation is not pain and thing itself. So there is strategy, planning, and they are methodical to a degree. So you can't just print. Even they know that. The way to weaken the dollar is to cancel income tax and print what you need to make up for it. But you can't. Maybe you don't want to weaken the dollar. Maybe you just want to strengthen foreign currencies. How do you strengthen foreign currencies? You buy them. So maybe the Fed has a global um, treasury or like a treasury initiative where they're accumulating foreign currencies. And what are they going to buy them with? Oh, dollars, which they could print because the Fed could print dollars using credit. So they could strategically weaken the dollar by accumulating a basket of foreign currencies. One that would export dollars and allow foreign countries to finance applications and prevent global deflationary collapse. Okay, so that kind of makes sense. I thought I'm no economist, but that one actually kind of makes a lot of sense. Basket if the Trump admin brings clear rules and regulations to restart ICO, could unlock new massive wave of innovation. Okay, ICOs as in like the real, what it was meant to be, not just a bullshit capital raise back in 16, 17. I mean, like a real capital raise. But that's, I kind of feel that an ICO really does fall into, you need rules and regulations about that. If you're going to do a capital raise, that's kind of like, that's SEC stomping ground. Not the way they've handled things lately, but what's the rules? Just like you're going to IPO, I want to know what I'm getting for an investment. I want to know what, okay? So there's got to be some rules about a capital raise for a business. You can't just be like Bob's idea and Bob wants to raise $2 million and Bob has no business plan. So I don't know. That is something that I think about often. Um, that's why like TGEs and yeah, like Fjord Foundry. I don't know. I don't know about capital raise. It's complicated. I don't have the answers, but I know is the status quo isn't optimized. I think that is probably the most decent thing I could say. I don't like the investor protections of accredited investors. I think it should be very clear that you can invest in whatever. I'm a libertarian in many regards. If you want to invest, invest. I think that makes sense, but I think I'm more into like the education standpoint. People should have a capacity to make good decisions. Therefore, they need to be educated as such. I don't know. It's complicated. One thought at a time. Christian, we should be able to finance this government off emissions and keep weakening the dollar enough to save the world from starvation. Well, starvation is complicated because we already do we have enough food to feed the world? So we got big things like that, and like there's sustainability from a meat standpoint and a protein standpoint, and sustainability from a fresh water standpoint. It's very complicated topics aside from money. Money is ultimately a derivative of either a natural resource or an energy unit. Um, so not just weakening the dollar. also about effective incentive actually have the natural resources extracted and processed to the point where it can be consumed or consumed burnt as a fuel. You need to actually get consumer staples consumable with an effective quantity of money. So that's ultimately what money is an incentive system get keep the entire system actually working, right? Yeah, advisor, 7% of WLI. That's what I was talking about with regard to the Aave fork that Trump built. It was going to the Aave I read, and it was going to have a hell of a market cap. That's going to bolster Aave's market cap significantly. Very interesting. Good, good fact. Such a good fact. We, the people, mode law has spiked fees on Velo this week. It's only one small chain. Just wait for 100 OP chain. We're talking. Okay, so this is the scale and the scope of the thing I expect to come. What happens when there's 100 OP chains? What about 1,000? What happens when there's also 1,000 Arbitrum orbits? What happens when there's another 1,000 Cosmos hubs and you got seamless cross chain between all of them and money units and CRVUSD units, endogenous stablecoins printed within this crypto economy are in the tune of trillions. So there's so many regards it is quite early. And what are they doing with these exchanges? It's not speculating on just tokens for purposes of boredom or gambling. It's fintech. It's um, it's foreign exchange, FX, currency units of nation states, changing denomination in permissionless, globally accessible environments. That's probably a great point towards the conclusion of the stream. We, the crypto people, I really like that. Have that kind of scale and scope of a foresight of where things are heading. To cut spending, you have to print. Yes, unless they can simultaneously increase revenue. No, what? I'm sorry. If you cut spending, you have to print. No, if you cut spending, that's the opposite. If you cut spending, you proportionally decrease deficit. You don't have to issue as much treasury units, so to speak. So, hope that's clear. That makes sense to me. I feel like cutting spending was only half the plan and cutting taxes was the other half. Well, if you cut spending, you can cut taxes. Think about balancing, a QuickBooks or your accounting books. It has to be half the plan because if you cut spending, um, what are you doing with debt? How are we repaying debt? Now we have extra income. How do you prevent people from spending that extra income? How do you make sure debt gets repaid? Bear in mind, debt getting repaid is deflationary. Oh shit. Now it gets to the weird part of the conversation. When you pay off debt, you're destroying currency. Oh, okay. That makes it more complicated, Christian. Not so easy. Because if you're destroying currency units that are circulating in the global currency supply, you're probably going to cause depreciation. So I don't think it's as simple ev- as people think, and still you and I just try and wrap my head around that. Paying off debt or defaulting on debt is deflationary. Deflation causes prices to come down. Prices of risk assets, which is just speculation and gambling. Um, and deflation could cause bankruptcy and lack of capacity to finance debt obligations, which basically means there goes a refinery or there goes a manufacturing plant producing food products. All right, and that's no good. That's inflationary, consumer price inflationary. One of the most important things that I learned was consumer price inflation is quite distinct from monetary inflation. Very, very distinct. Irreverent Nexus. Hope you've been well kept. Wild times we got going on here. Yes, it is, but it's a start. We've been here before many times, so it's not like it's what's going on. We kind of understand what's going on, and that's probably the most important story to tell right now in a calm, cool, collected way. This is not unexpected. We've been literally on this stream. You've been on the stream with the captain for years at this point, and we're like, all right, this is what's coming. And we look at the macro data that tells us we're kind of getting there, and it's finally suggesting that move wants to roll over, and that's where I think we are. Like Bitcoin's breaking out, great. That means the back and forth. Move rolling over implies Bitcoin wants to break out. Bitcoin breaking out implies move wants to roll over. So as move really starts to roll over, that's the weird zone. That's the butter zone. But we've been expecting this, have we not? Christian, canceling the income tax was the perfect solution to this monetary situation as part of the equation. Canceling income tax technically is consumer price inflationary because that means everyone has more money and they're going to be buying things, so that's going to drive prices up. Canceling income tax is a problem with regard to financing, um, debt obligations. I don't know. I don't have the answers, but that's not so simple. You need to get the income. You can't just cancel income tax. I mean, that's clearly a populist statement. Um, but I want to see that. I would like them to do that, and there'd probably be a lot of papers, the economic models, to see what happens with tariffs, because you can't just instantaneously repatriate a supply chain. And if you repatriate a supply chain, how the hell do you export dollars so the world doesn't go through a deflationary collapse, of which we're still dependent on the rest of the world? And even if we weren't just dependent on the rest of the world for our own existence, it's the rest of the world. So kind of important to have a rest of the world. It's a lot of people. So there's a um, you know altruistic aspect to not collapsing the rest of the world. Partials in the house. Partial, can a small investor earn benefit from Curve ecosystem? Most of the system is in Ethereum. Maybe not. Maybe not. Um, I don't have the answer necessarily. And in the end, we all get to measure how well we did from a portfolio success standpoint. In hindsight, maybe gets better at cross chain. I mean, there is cross curve from AWA, so maybe there's a deep integration with CRV. So now there's plenty of CRV gauges on Optimism and Arbitrum. So there's plenty of curve, but you're not going to get the exposure other than mainnet, and mainnet your vote is uh, you're voting on other curve chains. So I guess it depends where the vote rentals are, and I don't think the vote rentals are the future, which is interesting because that's maybe a little anti-convex. Convex is very vote rental heavy. Um, I'm much more interested in just the cash flow. So that cash flow is base fee curve. I don't know. I don't have an answer, Harshal. I think the appropriate uh, thought process to consider is if you have doubts, that plays into position size. And then also an ineffective position size may invalidate a position entirely. You cannot have a decent position size. You may not consider the position. Um, so total portfolio, total capital available uh, does affect types of investments that are reasonable and considerable. Like dollar cost average is probably the only thing that's reasonable for a lot of folks, depending on risk tolerance and depending on initial capitalization of a portfolio and what you could do. Like for instance, $100,000 portfolio takes five 20% positions, $20,000 a piece, and the $20,000 positions are hopefully earning 10, 20%. You're talking two to $4,000 for each position times five. 10, $20,000 in revenue per year. 10, 20,000 is serious. Uh, Interestingly enough, that is not necessarily outperforming. But if you take in the $100,000 and the 10, 20%, and you're saving that in Bitcoin, okay, great cash flow, and you're speculating that the $100,000 turns into $1 million over the course of 4 to 8 years, comes it's terrible, even though it's closer to the risk-free rate of return, and it's not closer to like a Bitcoin CAGR, which is a hell of a CAGR. Um, anyway, that was a relatively sophisticated uh, uh, capital management series of thoughts right there. Maybe folks want to rewind that and play that back a couple times, but I hope that thought helps. Um, just because I have a great opinion of a particular business, it's not up to me what everyone else's opinions are. And in the end, we all get to look back in hindsight and assess whether we made good choices or not. So in the end, we're all just going to come back in a couple of years and have a story to tell. I think that's a decent way to say it. Hope that helped, Marshall. Kristen John, maybe on January 20th, we wake up and the IRS is gone. I think this see. Marshall, let the banana zone begin. It's pretty darn close. 79. Come on, baby. So close, so close, so close. It's more likely they have a dynamic taxation system, the Fed could control it. It goes tax free when we need inflation. Well, now you're talking about capital controls, or at least a more mutable implementation. This is why we're so angry at traditional finance as compared to DeFi in the crypto space. That's only 4 years old. It's because it's so rigid. You would think the interest rates vary every second of every day. You would think the interest rates are truly dynamic from a Fed fuck, just adjusted every second. And just like you're saying, from a tax policy standpoint, let's go. You need to, you got too much inflation, increase taxes. But that's kind of like a modern monetary theory now, also. So that's a uh, slippery slope there. That didn't work out so well in 2020, the modern monetary theory stuff. Maybe the Fed gets a new lever in their arsenal by controlling the adjustable tax rate. Uh, yeah, but this is kind of what we just talked about. But yes, I think that'd be interesting. Um, I'm not too fond of the income tax, though. I don't know how we turn it off, though. I don't know how you turn that thing off. It's a beast, and that's a lot of income that pays the bills. I don't. Anyhow, maybe you give the Fed five settings on income tax rate that can go up and down, and Congress, controlled by Congress. Yeah, you know how slow as hell Congress is. You know how long it takes for anything to get through Congress. It's damn near impossible. So, smart contracts, and then there's no person to poke your finger at. Oh, Jerome Powell raised interest rate. Let's poke fingers at the Fed. It's his fault. Money print to go burn software and a contract that doesn't get done. And it's predictable. But the price is in the market. Market is able to adjust to the policy defined in the contract with confidence and predictability and expectation. That would stabilize markets rather than people gambling on the subjective choice of human bureaucrats. an automatic bill. We're going to wrap this up in a couple seconds. When inflation goes negative, it automatically drops the area, stuff like that, adjustable tax policy. I appreciate that. I like that. And that's why I like CRVUSD so much with its adjustable interest rate. It really changes everything from a stablecoin standpoint. Ladies of the crypto space, it is Sunday, November 10th at 11:51 a.m. Thank you all for reaching the end of the stream with me today. You are all a little bit more rational as this bull market certainly starts, and that's purely from a Bitcoin price standpoint. We still don't have our macro tailwinds, the strongest of macro tailwinds, which is a move indicator rolling over and a DXY becoming weaker in the short term. So look forward. The best is yet to come. 834 people made it to the end of the stream today. Enjoy the rest of your weekend, and I will see you for more streams this week. Till then.